The halving does this amazing thing. So what the halving does is it changes the fair value. Well, why? Well, because if you think about it, the miners, their costs are fixed. Electricity cost, miner cost. And so when the halving occurs and the block rewards get cut in half, in theory, a whole bunch of miners have to go out of business unless the price rises. So what we've seen in every cycle up to this point is a doubling of the fair value to adjust for the decrease in block rewards. Makes sense. Bitcoin, as of the last halving, became equally, the stock to flow ratio was roughly the same as gold. With this halving in 3 weeks, it will be more scarce than gold. So it'll be a better, harder currency.
Not only has Bitcoin drawn the interest of individual investors recently, but institutional giants have also taken an active role in it. The world's largest asset management company, BlackRock, is among the main players that have increased their holdings of Bitcoin considerably. This is causing a seismic change in the cryptocurrency market, as evidenced by the fact that BlackRock is holding over 252,011 BTC, and that flows have topped $13.5 billion in just 11 weeks. It is clear that institutional clients are placing an elevated value on Bitcoin. However, a wave of worries about the security of Bitcoin investments has coincided with this increase in institutional interest. A growing number of investors are cautious about potential risks, including institutional manipulation, unclear regulations, and the possibility of asset taking or government involvement. Mark Yusko, CEO of Morgan Creek Capital, recently offered his thoughts in an exclusive conversation with Sean Clarke, addressing these issues head-on. Yusko provides insightful insights on handling the present market uncertainty while exploring the nuances of Bitcoin's disruptive potential and revolutionary influence on the financial landscape in this fascinating talk. Whether breaking down institutional participation into its component parts or offering his most recent price projections for this cycle after the halving, Yusko's insights are invaluable for both seasoned investors and newcomers alike. So join us as we explore Yusko's viewpoint from this insightful interview, shedding light on the evolving dynamics of the crypto market and the future of Bitcoin in the institutional realm.
Fundamentally, blockchain technology and Bitcoin in specific as the first use case of blockchain technology fundamentally disrupts financial services. The same way the internet disrupted media and commerce, the way the printing press disrupted the church way back when. So the question on the ETFs, BlackRock, 5 years ago, Larry Fink, it's an index of money laundering. It's for bad people, terrorists, and you crazy. Yeah. No, we hate it. June of last year, Larry's like, I'm in, and applied for an ETF. I'm like, it's over. It was definitely going to be approved. I started talking about it. And look, I was wrong. I thought he would be the only one to be approved. I thought they'd pull a really fast one and say, look, Larry's part of us. He's part of the group. And so we want him to be the king. And we want all the others that are upstarts, like 21 shares, which we own a piece of, and Bitwise, which we own a piece of. You guys can't play. Thankfully, I was wrong. And so they approved them all. And what it does is it goes from technology savvy people, young people, to myself and all my friends, right? The boomers. It's a boomer wrapper. The ETF is a boomer wrapper to get access to this fundamentally better savings technology. Max Kaiser says, they're gonna seize it all. Okay, let's go down that path. Let's say they tried that. If they were to seize all of the accounts at Merrill Lynch and Bank of America and UBS and everywhere else that bought this, security, it'd be a violation of U.S. law. So there'd be some ramifications. And you can say, eminent domain for national security. Okay, let's see how that flies and how many votes you lose. But here's the problem. What does that do for the rest of us? We're happy, right? It's like Satoshi Nakamoto said, what happens when coins are lost or stolen? Consider it a donation to the rest of the community. As long as there's one left, it doesn't have to be one Satoshi, 1/100 millionth of a Bitcoin. as long as that isn't under the control of the evil BlackRock, the whole value of the network goes up, no matter how many you cancel. So I actually don't think they're in the business of canceling. I think Larry's in the business of making money, charging fees. Yeah. And at the end of the day, this technology, I believe, is a superior savings technology. And every empire eventually falls. And the way you protect yourself is by having a store of value, a hard asset. In the past, that was gold. In the future, I believe it will be Bitcoin. Why? Well, Bitcoin is structurally equally hard, meaning it's equally scarce. The amount of gold that's mined every year roughly equals the amount that's lost or stolen or kind of used up. So it's interestingly hard. Bitcoin, as of the last halving, became equally, the stock to flow ratio was roughly the same as gold. With this halving in 3 weeks, it will be more scarce than gold. So it'll be a better, harder currency.
Yusko is unwavering in his conviction that blockchain technology and Bitcoin have the capacity to revolutionize the financial industry, despite persistent worries about the safety of Bitcoin investments and the potential for market manipulation by large financial institutions. He sees a time when these developments completely reshape international financial structures. In contrast to concerns about manipulation, Yusko views the participation of major organizations such as BlackRock as a driving force behind Bitcoin's progress towards widespread acceptance. He contends that Bitcoin is fundamentally immune to manipulation by a single party and projects the cryptocurrency to expand significantly during the present cycle. But that's not all. Let's go back to the interview where Mark Yusko discusses his most recent expectations for Bitcoin in light of the halving.
Fair value today, as you and I are speaking, is in the low 50s. That's a Metcalfe's Law model that Tim Peterson and others calculate. The halving does this amazing thing. So what the halving does is it changes the fair value. Well, why? Well, because if you think about it, the miners, their costs are fixed. Electricity cost, miner cost. And so when the halving occurs and the block rewards get cut in half, in theory, a whole bunch of miners have to go out of business unless the price rises. So what we've seen in every cycle up to this point is a doubling of the fair value to adjust for the decrease in block rewards. Makes sense. But that movement that's built in, hard-coded in the code from Satoshi himself, that code then attracts attention. And, it's not politically popular, but true. The vast majority of people who are traders happen to be male. Males have genetically, back to our long distance ancestors, the hunter gene, right? And so if someone were to walk by my door out there, right, I would look. So my point is, once that price starts moving, all the traders, mostly male, pile in. And then the gamblers come in and the speculators and they lever up, and then we get to the overpriced level, usually 2.3 times the fair value. So let's say fair value this cycle, 50. We're going to double. But this time we're not going to double because now we have ordinals. Ordinals allow there to be transaction fees so the miners can get compensated not just from block rewards. So maybe the fair value only goes to 80K. Okay, let's just be conservative, 80. Double, that's 160. We shoot right through 160, but we're not going to go as high this time, I don't think, because there's not as much leverage as the last two cycles, because they clamp down on Binance and FTX. So let's say we only get to 160 this cycle. Okay, then fair value will continue to accrete. The next cycle, we hit gold equivalents. And gold equivalents, which is about 6 trillion. Everybody says 12. No. Half the gold in the world is jewelry and chalices, and that doesn't count. It's the monetary value of gold at central banks and in those big coins that matter. So that's about 6 trillion. 6 trillion, divided by, call it, 15 million coins, because there's been some lost or stolen. gives you about a 400K price. And then we blow through that a little bit, and that gets us to the 500K. So I just think that's pretty easy over the next 5-6 years. And then the question is, Quo Vadis? What do we do from there?
Mark Yusko offers unique and insightful regards on the current Bitcoin cycle. He starts out by saying that, as of our conversation, he believes the fair value of Bitcoin to be in the low 50s. Tim Peterson and other experts in the field of cryptography developed the Metcalfe's Law model, which is used to determine this fair value. Yusko goes on to discuss the relevance of the halving event, stating that because it affects miner profitability, it changes the fair value of Bitcoin. Block rewards are being halved as a result of the halving. Therefore, in order for miners to continue making money, the price of Bitcoin must increase. In the past, this has caused Bitcoin's fair value to double after each cycle in order to make up for the lower block rewards. But this time, according to Yusko, things could be different since ordinals, a type of transaction charge, have been introduced. These costs let miners be paid in addition to block rewards. This would lead to a more cautious doubling of the fair value, which might only come to around $80,000 this cycle. Yusko then makes predictions about the future, speculating that Bitcoin's fair value would rise in subsequent cycles and eventually achieve what he refers to as gold equivalency. This refers to a situation in which the market capitalization of Bitcoin exceeds that of gold, which Yusko estimates at about $6 trillion. This may be divided by the approximate total number of Bitcoins in use to arrive at a price objective of between $400,000 and $500,000 per Bitcoin. Yusko believes that during the next 5 to 6 years, reaching these milestones should be rather easy. He does, however, raise the question of what happens next, implying that there may be room for much more development and change than current estimates allow. With Yusko's observations, viewers may have a thorough knowledge of both the variables that will drive Bitcoin's value in the upcoming years, as well as its possible trajectory. After considering his research, it is clear that Bitcoin still has a long way to go, and that this revolutionary digital asset has a bright future ahead of it.